Abercrombie and Fitch handily outperforming its peers, shares up nearly 300%. The retailer even managing to beat out AI darling Nvidia with its more than 240% gain. Abercrombie is having its best annual performance since going public in 1996 and is the best performer in the S&P 1500 index. It is a sharp pivot from last year when shares were down 34% for the year. Abercrombie up about $3 billion in market cap. Nvidia, of course, up $800 billion, but percentage gains don't lie. All right, but Abercrombie, just one example of the strength we have seen in retail with the XRT ETF up about 20% this year. So can the retail industry's resilience carry forward into 2024? Joining us now is Bernstein's Anisha Sherman to help discuss that. Anisha, great to see you. How are you viewing, I guess, the current state of the consumer and how it is creating winners and losers, perhaps, in the retail sector?
It's very bifurcated. So this year, we saw the kind of stabilization of the low-income consumer who really suffered last year from the rise of inflation, from the rise of food prices, from the rollover of some of the COVID benefits. This year, we've seen more of a stabilization there. What we've seen is the middle-income consumer is more squeezed and is trading down. So some of the more value retail names have benefited from that, like the off-price names. But some of the more middle-income stocks, like department stores and vertical brands, have suffered. So going into 24, I think we'll continue to see some of the trade down. I continue to like value retail. And I also continue to like athletic names and sportswear because they seem to be more resilient and more durable than fashion going into the next year.
When you refer to value-oriented chains, I guess, are they the standard names that we might expect? Is it the Walmart and Costco's or others?
I think it's those. I think it's also the off-price names, the TJX, Ross, Burlington, Five Below has been another one that's outperformed. So any names that kind of focus on that consumer that's squeezed in the middle, that's offering them a better value proposition for holiday, for gifting, and for general purchase than what they might find at a department store.
You mentioned athletic. Just to talk about Nike quickly, it's had a really minimal bounce off of that, I guess, sell-off after a pretty disappointing quarter and outlook. How are you viewing the story right now? Because there has been some questioning about, whether the growth engine there is intact. Is it just mostly China? What else might be happening?
The sentiment has been so volatile for this one. It went from being a crowded short in September to a very crowded long into results in December. But really, nothing's changed in the story between December 20th and today. And yet the stock's down 11%. The H2 guidance was cut, but it was cut about half that amount. So I think it's a little bit of an overreaction because it was such a crowded long and it was a bad setup into the print. I really like Nike into 24. I think the guidance that they set was prudent. I think they have a good chance of beating it. There's more upside in some of the innovation pushes they're doing and some of the investment they're making into areas like running, women's, Jordan. And there is more upside in any macro improvement in the U.S. and China. So the upside is asymmetrical at this point, and I like Nike into the next year.
You mentioned the macro. It's always tough to really tease out exactly how much is the environment, how much is about the company. But, Lululemon, I guess on their call, they tried to be downbeat, even though they weren't seeing a lot of real evidence of current weakness. What do you think about that name and how it's positioned?
Lululemon's interesting because its core segment is maturing and is slowing down, which is the North America women's apparel segment. That's growing single digits at this point. But Lulu has done a great job putting new things on the map. Men's is growing, accessories is growing, the China business is growing, things like belt bag and hiking boots. So they've done a good job continuing to innovate and finding high growth areas to offset the slowdown in their core business. And they've actually done a better job at that than Nike has in the recent year. And you can see that in the delta and the performance.
Right. I guess big picture, if you sort of draw up the basics, the foundational elements of a retail trade and say we have unemployment under 3%, you have wage growth around 4%. It seems like you have the makings of a pretty steady spending environment, but then we have the kind of indebtedness in some areas of consumer having credit delinquencies go up. Does this feel like, this vigil for a recessionary type outcome, or is it just kind of a downshift?
No, I think I'm more optimistic because I think, especially the low-income consumer, there's really that their spending has really suffered over the last year and a half. They're more stabilizing, and as inflation continues to come down and wage growth, we see another statutory increase coming in January. So real wages continue to be positive for low-income consumers. I think we'll see more resilience there. And the middle income trade down, we're going to see another couple quarters of it, and then we start lapping it. So I think we see more stability there as well, kind of into the summer and into the second part of the year. So I think it will be a story of more resilience because we're not seeing a big downshift in spending. We're seeing more kind of stabilization and slight growth at this point.